What's up, YouTube? Welcome to another video. Today is January 11th, 2024. Welcome, everybody. So in my last video, I made mention that I picked up some gram gold. I received it. I want to show it off to you guys. And yeah, let's talk. Let's do an update. Quick disclaimer though, I'm not a financial advisor. Please do your own research and consult with a financial advisor before making any investment decisions like buying gold or silver or following any of the strategies I discuss on this channel. It's for entertainment purposes only. Also, if you guys like these videos, please like and subscribe. Check out my website, My Road to Wealth and Freedom. The link is down in the description below. So quick update today. Gold's below 2020 US. Silver 2269. Markets are kind of taking a bit of a breather. Bitcoin's up at almost 47,000 US on the back of that Bitcoin ETF. I guess it iShares Bitcoin ETFs began trading on US exchanges. Bitcoin rises as high as 49,000 briefly as first US crypto ETFs began trading. So yeah, I mean, there you have it. Oil's up on the day. We had a hotter than expected inflation report for December. Oil, I think, is 72.32. So yeah, Bitcoin's been doing really well. I have, as I told you guys before, I got a really small position in Bitcoin. And yeah, it's just kind of one of those things that, you know, I view it more as like a speculation. But at the same time, you know, I don't know where you can triple your money or lose, 80% of your money. So I kind of, I kind of play around with it. I shouldn't say that. I don't really trade it at all. I buy, little bits when it's really cheap, and I just kind of hang on. I just always want to have that small little position just in case it ever does become, what a lot of the Bitcoin maxis say, it'll be millions of dollars and, whatever. I have like a very small position, so it's nothing really to brag about, and it doesn't really have a significant impact really one way or another on my overall financial picture. I was sort of hoping that all that stuff in the Bitcoin market last year would have, held it down a bit longer. And yeah, and it didn't, and that's what I mean. Like, nobody really knows the future here. These what's it called? These crazy markets, anything can happen. So yeah, anyway, yeah, on to the gold. So I got some pieces of gold here. This was that half ounce, this is the half ounce maple. Really beautiful. I got this last year. Now, this is a 10th ounce. It's a little bit, it's not a maple, but that year, they were doing like a special anniversary edition of the I don't know, First Special Forces, something like that, the USA and Canada. They had these on sale. It was a really good deal, probably because nobody really knew what it was and nobody was really buying it. But it is a 10th of an ounce 4.9 fine gold made by the RCM back in 2015. So just thought I'd kind of throw that out there. That is, I think, the smallest gold coin I have. And this is a 5 gram Credit Suisse bar. Picked up that last summer. It's really interesting, really neat. Again, if I find anything interesting or cool, usually like to pick it up every now and again. And yeah, this is the package of 2023 MAPLEGRAMs. It's my first MAPLEGRAM. Charles Doust he's the chief assayer of the Royal Canadian Mint. So what's really interesting, first off, guys, these are really small. I want to compare a 10th of an ounce. I don't have a 1/20th or a 1/25th ounce, but these are really tiny. But they're really neat. They're just like little beads almost. It's kind of, it's a lot smaller. The first time I saw a MAPLEGRAM, I was at a coin shop, and I was just really amazed at how small these really were. Because I mean, when you're buying these online, when you're looking at things online, you know, these images are much larger and like you can make out the details, but these are just little teeny tiny, like smaller than your pinky fingernail, basically. If you look on the back, I can't really see the back that well, but it has Queen Elizabeth II, 1950, I don't know, 2023 or 2022 or something like that. I forget what it says. But each one of these is in this little bubble pack. It's almost like chiclets. I'm not going to break it up or anything like that. I'm just going to keep it like this. I really do like that, though. You can flip and break these things off. And each one is individual serial number. I got A0223 2 or 001 all the way to 25. So I got the 1 to 25. What's it called? Serial numbers, you know, 1 gram, 495 pure, 2023. These are really neat. And I guess they have like the denomination. I want to bring it right up. There we go. It's like 50 cents basically. I'm trying to show you guys. Yeah, so these are really tiny. They have the radial lines. I mean, this is just really, really cool. It's so cool how they got them this small. Like I say, typically this isn't usually an item that I would typically buy. It's simply because I mentioned before the premiums on these things are so high. You know, there was a sale. I picked it up. I think it was 5% premium on these or something like that, which is pretty good. I know there was one commentator in my comments, you know, that thought I was crazy for buying this at, I don't know, 5 to 7% premium, or like, where am I buying my gold or something like that. But I asked him where he gets his and he didn't reply. But you know, there's I can't find any gold to buy without a premium, so I don't really know what people are thinking. Good luck. I've checked all the coin stores and banks and bullion dealers and stuff like that. And yeah, I mean, if anybody has a better better place to buy gold, you know, from a reputable, you know, dealer or something like that, let me know. I'd love to know. I love to hear it. But anyway, yeah, and that's another like big goal purchase for me for the year. I'm kind of been slowing down a little bit. I've been focusing more on, you know, investing in some of my other areas. I'm really big on passive income, and you know, back in October, there was some, you know, decent blue chip dividend stocks that were just getting hammered, and I like to I like to buy those stocks. I like passive income, and my plan has always been to kind of grow passive income, and because ultimately I find like the future is really uncertain, right? For 3 years now, we've been hearing it's going to be a big recession, a big crash, a big crash, a big crash. And, you know, here we are today. You know, the S&P is at 4761, higher than it was. Like it's almost back to its all-time high of 2021 or 2 or whatever it was, 21, I think. You know, the Dow's just below 38,000, Nasdaq's just below 15,000. I mean, these have had a bit of a correction, but really it's not like this big huge crash. And you know, the bonds have, you know, really taken a hit. There's been kind of, you know, the past couple of years, it seems to be kind of everything has just had like really kind of a terrible go. The only thing that really has strongly recovered, I would say, would be that Bitcoin, of all things. And I mean, gold is hanging in there, but it's not, you know, breaking to new highs. Although you know, it seemed for a while, you know, about a month ago, that it was going to break out. That's not why I buy gold anyway. I buy it for, you know, wealth preservation, you know, wealth insurance, that type of stuff. But But yeah, I just want to say, like, I diversify my investments, as I think everybody should. It's just, that's just, being prudent. Anything else, like, I don't know how people can say that they're so sure on any one thing. I'm certainly not. You always should doubt yourself, doubt your, you know, views and convictions and stuff like that. Or I mean, like, don't doubt, but I mean, at least hedge against the possibility that you're wrong. And I think, like, a lot of people who lose a lot of money, like some of the younger, Bitcoiners back during the craze in 2021, when you have everything in something and it blows up, you lose a lot. You can lose everything. So I don't know. It just, in my own sort of like financial journey, I've always looked at, like, what do, the big investors and the wealthy do, with their assets and that. And it's not in any one thing. It's usually spread across, different businesses and real estate and probably gold, stocks, bonds, cash, these type of things, right? And one of the things that I view as kind of a positive development is that as a result of all this rate hiking and, all of this stuff, investors can finally earn, a meaningful return on just simply sitting in cash. Now, I'm not saying inflation won't eat away at some of that. And I'm not saying that, cash is the end all be all, but I'm just saying, over the last 10, 15 years, if ever I went to cash, I was earning zero. And, you'd have to take whatever kind of loss it would be while you're waiting for a correction or, whatever it is. And yeah, now, people have real options. In fact, I think, in the past 10, 15 years, dividend stocks, they were all the rage. There was huge craze, and I'm a huge dividend investor. I mean, I totally rode that boat, and that was I still think I loved my dividends. It's nice to be paid consistently, regularly. These stocks, if you pick good stocks, they increase their dividends. If you're investing, like, a dividend growth investor, you're buying, solid companies that have a history of increasing their dividend payment over time. And, overall, you kind of look at these stocks, and over the long term, they're, average annualized gains of, 10%, probably half that's in dividends. The other 5 is, just the growth of the share price itself or whatever. And that's actually a really great return, especially in a 0% interest rate world. So it pushed a lot of investors. I'm not the only one. It's almost everybody was in that game, right? So, but now we actually do, and for a lot of people, being 100% invested in the stock market, or, a 60-40 or something like that, or if you have a big dividend portfolio, that really puts you, in a lot of, like, you're at a lot of risk at that point. If the markets kind of blow up and dividends get cut and stuff like that. I mean, again, like, but the way these central banks, with their 0% interest rate policies, that forced a lot of people, a lot of retirees, a lot of folks searching for income, be it, they're in retirement and they need it, or they're just like, they're like me. I like to have that dividend income. I reinvest a lot of it, but sometimes it's just kind of nice to have that coming in, and you have that security, like, hey, you know what, if I lose my job, I'm getting maybe $2-3 grand a month in dividend income. I mean, that definitely smooths things over, and can kind of hold you over while you get back on your feet again. And that was always my approach toward that dividend investing. But now we have, some serious problems in the economy, and, it's really uncertain where things are going. I delevered, got out of debt, and now I'm sort of slowly rebuilding, that passive income portfolio. So, and that's kind of what I do. It's just, I just stay diversified. I don't really know what's going to happen, but it's nice to have some hard assets. It's nice to have some cash. It's great to be debt free, and it's good to have an investment portfolio that generates fairly consistent and growing income over time. And I view that as just as important. Like, I could, if I lost my job tomorrow and we were in a major, kind of downturn and I couldn't find another job right away, or, whatever, as long as those dividends don't get cut, or they don't get cut by much, I mean, that's still going to generate, that's something, that's a resource. It's an asset I can tap to float me over, to pay our family bills for the next so many months. And, $2 to $3 grand a month is nothing to kind of sneeze at, right? So, it's kind of good to have, that kind of security, especially given, you don't have a mortgage payment or car payments and stuff like that. So that's kind of how I've tried to shape my family's personal finances. I'm not saying that approach is right for everyone, but I certainly think it's right for me and my family. And like I said, I feel like I'm doing pretty good. I could always do better, but that's just kind of too hard. I find, like, I'm not about the risk at all. And we're still growing our net worth. We're still building wealth consistently. Our dividends are growing every year. The trajectory is on the right path. I also do things online, like this YouTube channel and, my blog, my website and stuff like that. And that brings in online income. I consider it really kind of, you can't really depend on it, right? It fluctuates up and down. For the past year, I'd say it's been actually terrible. I was doing much better a lot, like in 2020 and 2021 and 2. But I think that's just kind of the economy, right? People, advertisers aren't spending as much, and this and that and the other. So, I mean, there's lots of stuff involved in that. But I found, since then, when my dividend income was lower, my online, income was a lot better, and it kind of carried me through those kind of leaner times. And now the situation's flipped. My online income is hard. I'm down probably, 60%. I've seen a 60% drop in that income. But now my passive income portfolio is ramping back up. It's doing great. And a lot of that is, money market funds, the interest rate effect, right? I'm getting half decent interest. Dividend stocks are on sale. And they might drop further, but some decent names are paying, a 7% or more yield. I mean, 6-7%, that's not bad. And if inflation really does kind of come back down, I think it's going to be messy. I think, we're probably going to see inflation, it looks like inflation came in hotter than expected, but we're around, I think, 3.7%. Government numbers, of course, which we know is probably, 8-9% or something like that in the real world. But nonetheless, right? Like, inflation will come down, and, if it's because of recession or whatever. And then I see a lot of analysts think that it's going to jump. If the Fed pivots too soon, inflation's going to come roaring back. I mean, I don't really know one way or another. It's just, my head's always spinning. One person says this and they make a lot of really good points. The next person says the complete opposite and they have just as valid points. And, someone's got to be right at some point. Maybe someone's right first, then, the other person's right in the end. And it's just too, for the average investor, for somebody who really doesn't follow these things like on a day-to-day basis, I think the best way to play this is just have that diversification. If If you have a little money in real estate, that's fine. You know, don't just, I think the key is don't have a lot of debt and don't be over levered. And if you can kind of, you know, get out of debt, de-lever your investments, if that's what you've done, if you've used some leverage to buy into, I don't know, Bitcoin or gold or stocks or whatever, you know, get out of all that crap and just, you know, buy it. Like, you know, every pay I buy some stocks, I buy some more money market funds, you know, sometimes I buy gold, the odd time I might buy some Bitcoin. Like, it's all very, you know, kind of consistent, but I'm not using any leverage. You know, I used to once upon a time in a 0% interest rate world. It made sense in some cases to use leverage to buy income generating assets. But with interest rates at, you know, 7% or something like that on like lines of credit or HELOCs and stuff like it, I really just don't see, you know, the value in using leverage for anything. So that's kind of my approach. And this year, you know, I think we're going to probably do fairly well. Last year, it looks like we made it over almost 33,000 in passive income, which is pretty good. I mean, that's like almost like, you know, a small paycheck, an annual, somebody working basically. And I mean, that's not like, the funny thing about that is that like, it's not even exciting stuff that I invested in. I just hold some money market funds, and, you know, if, you know, my investment portfolio is in this like really crazy thing, it's actually quite conservative, and yeah, I'm just kind of waiting for some real opportunity. I hope I'm not wrong. I mean, having cash on the sidelines is great. But if you're wrong, I mean, you can miss out on some extraordinary gains in the markets, especially if we get this kind of like, you know, the gig is up, you know, with the Fed, and they start, you know, this fiscal dominance idea where, you know, they're going to be, you know, buying, you know, restarting quantitative easing and stuff like that. That's going to send, you know, a lot of things rip roaring, and you don't want to be on the wrong side of that if it happens. But again, that's why we have gold, you know, commodity. I own some commodity stocks, oil and stuff like that. Yeah, that's kind of how I'm playing it. And, you know, if we do get this deflationary bust, even if it is only for a couple months, and then the Fed comes into the rescue or whatever, I mean, that cash on the sidelines can be deployed, you know, to scoop up, you know, stocks at a discount, maybe even some real estate at a discount. You know, there's moves to be made. So that's kind of my approach for this year, just sort of more of the same. And let me know what you guys are doing. If you guys are playing, if you guys ever bought any of this Graham gold, or, you know, what purchases you're looking to make this year, or just how you invest. What is your sort of investment philosophy? That's it for today, guys. Thanks so much. If you like these videos, do me a favor, like, subscribe, check out my website, My Road to Wealth and Freedom. Take care.